So, in order to understand rental activities in general, you need to understand when a passive activity loss is deductible. In order for a passive activity loss to be deductible, it must meet one of two conditions. First, if a passive loss arises in a current year, you have to go through the following. First of all, you got a passive loss. Do you have passive income to offset it against? If you've got $5,000 of passive loss and $6,000 of passive income, you wind up with $1,000 of passive income and you get to utilize it. However, if you have $10,000 of passive losses during the year and only $5,000 of passive income during the year, you've got to figure out what to do with that additional $5,000 of passive losses. The first thing you can do is say, is that $25,000 special deduction available? If it is, you can offset that $5,000 against other sources of active income. If it's not available, the next question is, are you a real estate professional? If you qualify as a real estate professional, you don't have to worry about that $5,000 being allowable against active sources of income. If neither of those are available, the $5,000 becomes suspended. You can't utilize it, but you do get to carry it forward to the following tax years. What you also need to take into consideration is you have to think about the passive losses that are flowing through the prior year's returns into the current year return. That becomes part of the same calculation. When you wind up with a net disallowed passive activity loss, what winds up happening is an allocation is made out to all of the taxpayers' passive activities of their prospective portion of that loss. These accumulated losses per activity can become usable when the activity no longer is a passive activity, when it becomes an active activity, or when you sell that activity. But remember the grouping rules. When you have a total disposition of a passive activity in a taxable transaction, the suspended passive losses may become deductible at that time. However, again, remember the grouping rules. Both the suspended passive activity losses and a current loss on that activity when it's disposed of may be deducted from active and portfolio income at that point. If you dispose of a passive activity with suspended passive losses in a non-taxable transaction or by gift, the losses do not become freed up and may be lost forever.